Guys, this is S&P 500 weekly technical analysis for the week of October 10th, 2022. That is from October 10th, Monday to October 14th, Friday. Now, if you have subscribed to my channel and if you have watched my previous weekly technical analysis of the S&P 500, then in my previous weekly technical analysis of S&P 500, I mentioned this thing that the divergence is decreasing to the historical lows. And because the divergence is decreasing, that indicates a reversal, a heavy reversal in the S&P 500. However, that reversal was supposed to come after Tuesday, like Wednesday, most probably on Wednesday after one or two candles. But we have seen that there was a reversal. Okay, that came on this day, on the Monday itself. Okay, on the Monday. So what actually was supposed to happen? That first it was supposed to come down, then it was supposed to hit around 3,500 or 3,525, and then after spending 1 or 2 days, when the divergence was supposed to hit the critical lows, in that case there was supposed to be a heavy retreat just like this one. Okay, that was there, and then it was supposed to hold, okay, in this particular zone. Okay, and if there is a breach, then to this zone of 3790, and if there is a breach of 3790, then finally we have 3840. So after hitting these the zones, then it was supposed to come down. So if you see that what has happened in actual, what has happened is that first, on Monday itself, it moved up. On Monday, it moved up without any reason, without any support from the technicals. So on Monday, there was this the very heavy upward movement in the S&P 500, in the Dow Jones, and in the Nasdaq, in the entire stock market. So this was without any technical. This was without any support from the technicals. Okay, and that is the reason it was a manipulated movement. Now, because this was a manipulated movement and it went up against the technicals, now it has created a short squeeze. What? A short squeeze. So what happens in the short squeeze is that whosoever were heavily bearish or whosoever were shorted, okay, means because this was the bear trend. Okay, so everyone was bearish, or most of the people or most of the traders, they were bearish. Now because of this the short squeeze, okay, that was created by the manipulated movement, now these people, they were forced to exit their positions, and that further increase, or that further fueled the upward movement, because they were exiting their positions at the market price. Now then came the next day. So on the next day, okay, it was the real impact of the short squeeze, because on the next day, before the so next day was Tuesday. Okay, so before the Tuesday, the Asian markets, the European market, because they have seen that there is a manipulated movement that has triggered a short squeeze. So all of these markets, Asian, European, all of the Oceania, okay, all of these the markets, they were heavily bullish. Okay, and they were bullish because of the manipulated movement, and that has triggered the short squeeze. So next day there was an absolute bullish candle, again approximately 2.5 or 3%. Okay, so what actually has happened? So what actually has happened in the S&P 500, in the Dow Jones, and in the Nasdaq is that because of the manipulated movement, okay, that has triggered a short squeeze, there was the upward movement of 5.5% in just 2 days, only and only in 2 days. Okay, and this upward movement, this heavily upward movement, this was not supported by the technique. It went against the technicals. Okay, now you might be having this question, okay, that because it was against the technicals, okay, there must be some kind of news, some good news. There was no news at all. There was no good news at all. Rather, there was a bad news, I guess, that was on 5th of October or 4th of October. Okay. So there was no news. There was no support from the technicals. That is why I'm saying that this was the manipulated movement. Okay, and this was the update that I gave to my community members, that most likely today, okay, on that day, the Monday, the movement in the S&P 500 was the result of October celebration. As such, there is nothing to celebrate, but today is the first day of fourth quarter, and last quarter was extremely bad. Okay, so this is just a revenge of that and nothing else. this has nothing to do with the technicals, and this is the reason why today we have not seen a gap down open or a downward movement upon open, as everything was pre-planned for today. And yesterday in my S&P 500 technical analysis, the daily analysis of S&P 500 that is exclusive for the members, I have mentioned that, see, today means yesterday on this the Friday, that there are now very heavy chances that we are going to see a gap down open, a heavy gap down open. That gap down open will be below all of these the moving averages, and this is a 4-hourly chart, and that gap down open will be very significant, because immediately upon open we are going to see a fall. So there is no more bullish retrace, now there is no more bullish movement. Okay, so a fall, a gap down open, and then a fall. And what is most important is that on the 4-hourly chart it is going to form a slip. It is going to form a slip. So once again, if you have subscribed to my channel, okay, in that I guess in last weekly technical analysis of S&P 500, I mentioned that because there was a slip that was formed, okay, at that time the entire stock market, the S&P 500, the Dow Jones and the Nasdaq, everything came down heavily. Now, so I told them that because we are anticipating, now there are very heavy chances that a slip is going to form. So when a slip is formed, this means that now everything is going to fall. So now the S&P 500, the stock market, entire stock market, the Dow Jones, the Nasdaq, every index will simply go for a nosedive, and then now it will simply breach the previous low that was formed at 3585, and then it will continue its journey towards 3400, and in one exceptional case towards 3150. So this was there in my pre-market update yesterday to my community members. So guys, even though the initial leg, the first leg was not as expected, and because of this the manipulated movement, okay, it went against the technicals, but the second leg from Wednesday onwards, it was as anticipated, as expected, and as predicted. Anyways guys, so once again, if you have not subscribed to my channel, then please subscribe the channel and click on the bell notification icon. And also, if you want to join my YouTube community to get the daily analysis of the S&P 500, in order to avoid falling into the traps, in order to trade safely, in order to make money, then I've given the link to my YouTube community in the description of the video, and also in the comment section of this S&P 500 weekly technical analysis. Now guys, let's discuss the agenda of this S&P 500 technical analysis. So the agenda, okay, as usual, first I'm going to discuss the S&P 500 technical analysis on the weekly chart, like what is happening on this the broader scale, and see why I have mentioned this, okay, many times, and why I was confident, and why I have advised my community members that go bearish, okay, on this level. The reason was that on the weekly chart, on the broader scale, the trend was still bearish. So this upward movement, it failed to change that trend, and in order to change that trend, the S&P 500 must close above 4,000 levels, or must move above 4,000 levels. That was not there. So that is the reason I've told my community members that go bearish. Okay, this is the zone because of 3 consecutive rejections from the 3790. Now we are more confident that it is going to fall. Okay, and we can still see, okay, this is the gap down open, a heavy gap down open. Anyways, so you can say that basically it is to get the sense of the market, of the S&P 500, the stock market, the Dow Jones and the Nasdaq, that what is going to happen on the broader scale. Okay, because when we know what is happening on the broader scale, what the trend is on the broader scale, then that helps us to avoid falling into the trap. So while many of the retail traders, okay, they were bullish, and they were thinking that they have made a lot of money in these 2 or 3 days, so they have lost, okay, that particular money when it was coming down, okay, because they were trapped. But because of the daily analysis of the S&P 500, my community members, they knew that this was the trap, and also this was the opportunity. This was the trap for the bulls, this was the opportunity for the bears. Simple. Okay, anyways, then I will discuss the recession through the monthly chart. So now I think last month, okay, I have discussed this thing, okay, through the monthly chart, means that technically when the recession is going to happen and how the recession is going to happen. So technically on this the monthly chart, I will tell you that either this month, in the month of October, okay, or most likely in the month of November, that we will be officially, we will be, means not actually official, but we will be technically in the recession. The S&P 500 will be in the recession. The Dow Jones will be in the recession. The Nasdaq will be in the recession. The entire stock market will be in the recession. The economy will be in the recession. So I will do this, the technical analysis, the S&P 500 technical analysis on the monthly chart, and I will tell you that why I am very much confident that we are technically, we are heading or we are moving into the recession. Okay. Then comes the third part, and the third point is the S&P 500 support and resistance level. So I will tell you, okay, the support and resistance levels, okay, just like this one, this was 3790, and this is something that I was telling to my community members that 3790, okay, it is a strong support, sorry, it is a strong resistance, and the zone of 3790, it is very important, very critical, because there were three consecutive failures, three consecutive rejections. That was, so that was the reason we were very much confident that it is going to come down. Okay, and that is the reason the members, okay, they were making money. Anyways, so I will give you the support and resistance levels, and guys, once again, these support and resistance levels, okay, these are not the usual the standard support or resistance levels or the pivot levels. No. This is something that I have calculated myself. I have analyzed, okay, last many years of data of the S&P 500, okay, and if you see that my support and resistance levels are extremely sensitive, and even if you do not know any technicals, even if you do not know anything else, and if you follow just my support and resistance level, then also you can make money. Okay, and if you have and guys, once again, if you have subscribed to my channel for last many weeks or months, and if you are trading through my support and resistance level, then you have seen by yourself that how sensitive and how accurate my support and resistance level. Anyways, so I will give you the S&P 500, these the support and resistance levels. Then I will discuss the impact of OPEC plus production cut. So the OPEC plus, okay, countries, primarily the Saudi Arabia and the Russia, okay, they have decided to cut the production by 2 million barrels per day. Okay, and this is a significant cut. So I will tell you that how this the production cut is going to make the recession more severe. So earlier there was the recession, okay, then it became the Great Recession, and now we are heading into the Great Recession. Okay, so that will be there for at least 2 to 3 years until 2025, I guess. Okay, so I will discuss this, the impact of OPEC plus production cut technically, right? Technically, and through the technical indicators, and its impact on the indices like S&P 500, Dow Jones, Nasdaq, and the entire stock market. Okay, and then the economy. Then I will give you the S&P 500 technical analysis on the daily chart. See, this is the weekly chart. Okay, this is the daily chart. So the weekly chart is like the hawk eye view. Okay, means on the broader scale we want to know what is happening. And this the daily chart. The daily chart means we want to know what is happening from Monday to Friday. So what will happen on 10th of October? That will be Monday. And then Tuesday, Wednesday, Thursday, and finally what will happen on Friday, that is 14th of October. So I will tell you, okay, that particular thing. And then finally I will give you the probable movement of the S&P 500 from Monday to Friday, that is from October 10th, that will be Monday, to October 14th, that will be Friday. That what is going to happen on each and every day, and how the S&P 500 is going to behave. And once again, if you are subscribed to my channel, and if you are watching my previous these are weekly technical analysis, that then you know that whatever movement I tell you, okay, like up, down, okay, or down or up, or a hold or down, whatever. So most likely the S&P 500, not just the S&P 500, but the entire stock market, the Dow Jones, the Nasdaq, it follows that particular movement. So in this week also, first it was supposed to come down, and then only it was supposed to move up, and then it was supposed to come down. So this was the movement. But what actually happened is that it moved up early, then hold, and then there was this the downward movement. Okay, so the movement was as was predicted. Okay, however, this was supposed, upward movement was supposed to be from Wednesday, okay, not from Monday. But because of the manipulation, and see, no one can control the manipulators. Okay, so this happens once in a while. And if you want to know, and if you want to test my weekly technical analysis, my analysis, okay, and my predictions, then you can watch any of the previous weekly technical analysis, and you can see that this kind of thing that has happened. Okay, so this is like, you know, once in a blue moon. Okay, this is not always. So guys, this is the agenda, and this is how, okay, I am going to proceed now. Guys, once again, because see, this technical analysis, it is going to be a bit lengthy. but each and every section contains very valuable information that you are not going to find anywhere on the internet. Okay, not through the videos and not through these the blogs or whatever. So I strongly recommend you to watch each and every section of the video. And to make it easy for you, I have made these the sections in my video. So if you want to skip any section, then you can skip, and if you want to watch or rewatch any section, then you can watch or rewatch that particular section. But once again, each and every section contains very valuable information. So I strongly recommend that you watch the entire technical analysis, because see, when I am talking about the recession through the monthly charts, okay, I am also talking about the levels of the S&P 500, the Dow Jones, the inflation, okay, and the PMI and the other things. So I can discuss, okay, a lot of things in each and every section. That is why I recommend my viewers to watch the entire technical analysis. But if for some reason, if you cannot, then I have made these the sections to make it easy for you. Okay, you can escape and you can watch or rewatch a particular section. So guys, I will begin with the S&P 500 technical analysis on the weekly chart. But before I begin the S&P 500 technical analysis on the weekly chart, let me clear this thing, that this technical analysis is not a financial advice of any kind in any form or manner. This technical analysis is not an advice to place your trades in the stock markets in any form or in any manner. This technical analysis is strongly or heavily dependent on the technical indicators. And other than the technical indicators, this technical analysis depends on the data, the critical data that comes out, okay, in the form of like the job reports, okay, or some very critical news like the OPEC production cut, okay, etc. Means something that impacts the stock market, the S&P 500, Dow Jones, Nasdaq heavily. So if you watched my previous technical analysis, then in one technical analysis I have discussed the food, okay. And if you are new to this this channel, then you might be surprised that why I have discussed the food in very detail. I have discussed the food and I have related the food to the inflation, that how and why the food is increasing the inflation, and why the feds, the governments they are very much concerned about the food. Okay, so I give you this kind of valuable information in each and every weekly technical analysis. Now guys, last but not least, whether you are making 1000% profits within a day, or you are seeing 20% or 30% losses within a day, these profit and losses are all yours. I have nothing to do with these profit and losses, because I do not know that how you are going to interpret my technical analysis. Now guys, let's begin with the S&P 500 technical analysis on the weekly chart. Now guys, we are here on the weekly chart. This is the weekly chart of S&P 500. Okay, and you will also see means almost the same thing is happening on the Dow Jones and the Nasdaq, right? Now the weekly chart means the hawk eye view. We want to know what is happening on the weekly chart, as simple as that. Okay, so first comes, let me write it down. Okay, W as in weekly. So weekly chart means that in case of this, the S&P 500, okay, and not just the S&P 500, but to this the Dow Jones and the Nasdaq. So weekly chart means that one candle represents 1 week, not 1 day or 1 hour or 1 minute. One candle means 1 week, right? Now guys, let's first talk about the candle itself. If you look into this, the last candle that was formed for the previous week, that was the week of October 3rd. If you see this, the candle, then what you are going to notice, that this is an inverted hammer. What is it? This is an inverted hammer. Okay. So whenever an inverted hammer, so see a hammer, okay, it can be formed just like, okay, like this, or it can form like this. Okay, this is the long wick, okay, and this is the head of the hammer. So in this, the upright position or the inverted hammer. Okay, whenever the hammer is formed in the upright position, it is a significator of a bullish candle, okay, or a bullish wick. Okay, but in this case, in this particular case of the S&P 500 on this the weekly chart, it is an inverted hammer. Okay, this means that the S&P 500 indeed tried to move up, but then it gave up, and then it came down. Means the bullish sentiments that were there, or that were okay, or the bullish sentiments that were resurfaced, okay, for some time because of the manipulation. Okay, those bullish sentiments are all gone, right? So this inverted hammer, even though it is green, okay, we don't care about whether it is green or red, but it is an inverted hammer. This is a significator that we are going to see a continuation of the bear trend, right? Clear? This is the significator of the continuation of the bearish trend. This means that in the coming week, okay, we can see this, okay, a very heavy red candle, very heavy red candle, and then week on week onwards, okay, we can see further continuation, okay, or we can see a candle, okay, that may be so that may or may not be red, okay, maybe like red or green, whatever, but that candle will be heavy. And heavy what? Okay, that will be heavily bearish. So there are chances that it can come down heavily, okay, and then in last 1 or 2 days it can retrace, okay, but whatever happens, okay, it is going to come down, as simple as that. Means this is the continuation of the bear trend. This is the significator of the continuation of the bear trend. That is the candle. Okay, now that we know that what the candle is signifying, okay, other than that, the second point of this, the candle, okay, again the second point of the candle, that this candle has closed below, sorry, this candle has closed below the 200 week EMA. What is it? 200 week EMA, 200 week exponential moving average. And because this is the second consecutive closing below the 200 week EMA on the weekly chart of the S&P 500, this means that now it is again a significator that we are going to see the continuation of the bear trend. Okay, because this is the second consecutive closing below the 200 week EMA, and this was the exactly same thing that I mentioned in my previous weekly technical analysis. Let's see, whatever happens, okay, you might see that the S&P 500 is moving up and whatever, but whatever happens, the S&P 500 will close below the 200 week EMA. No matter what, it will close below the 200 week EMA. Okay, and once again, thanks to my critics, okay, who have mentioned that after many weeks, okay, I was wrong about the Monday, only for this the Monday, but for the rest of the days, okay, the prediction was accurate, and then the closing below this the 200 week EMA. So I take this the criticism, okay, positively, that I was wrong, okay, after many weeks of this the accurate prediction only on Monday. So I take this the criticism, okay, very positively, and I am thankful to my critics, okay, who were looking for, okay, that when I'm going to make a mistake. So anyway, so after many weeks, after many weeks of the accurate prediction, okay, the previous Monday, okay, and Tuesday, okay, so that went against the technicals, against the analysis, but that from the Wednesday onwards, everything was as per the prediction. But again, guys, in my each and every weekly technical analysis, okay, I mentioned this thing that whether you are happy with my work or whether you are unhappy with my work, or if you want to ask any questions, then please feel free to write your comments in the comment section, and I will try to answer your questions. Okay, and if you are criticizing my work, okay, and if that is a valid criticism, in that case, definitely I will try to improve my technical analysis. I will do more research, and I will put more efforts to make it further, like more accurate, right? Anyways, so this was the thing, okay, that was accurately, okay, predicted the last week. The closing, it was below the 200 week EMA. Anyways, now let's look into the technical indicators. So we are done with the candle. First thing is the Ichimoku. Because the S&P 500 on the weekly chart is trading below the Ichimoku cloud, this means that the S&P 500 is bearish through the Ichimoku, right? Now, if you look into the moving averages, clear fan out, okay, this was the slip, okay. So now there is a clear fan out in the moving averages. Secondly, the S&P 500 has closed below all of these the moving averages. This means that the S&P 500 is bearish through the moving averages, right? Then comes the next part, and that is the Bollinger Band. This is the lower band of the Bollinger Band. This is the median of the Bollinger Band. Because the S&P 500 has closed below the between the lower band of the Bollinger Band and the median of the Bollinger Band, this means that the S&P 500 is bearish through the Bollinger Band. Okay. Then comes some other technical indicators. In these other technical indicators, we have the MACD. MACD is clearly bearish because the MACD is less than the signal. Okay. Secondly, both the MACD and the signal both are negative. This means that the MACD is heavily bearish. Then comes the stochastic RSI. Now, stochastic RSI K channel is less than the D channel. Okay, this means that the stochastic RSI is bearish or heavily bearish. Now, now there is okay, so there is one thing, okay, that we must consider. The K channel is 3.69. Okay, so if you can see, okay, at the left hand side of the where the stochastic RSI, okay, is mentioned, so the K channel is 3.69. This means that when the S&P 500, okay, it will be coming down in the next week, like Monday, Tuesday, Wednesday. Okay, so this the K channel is most likely to become. The K channel is most likely to become 0.00. Okay, and this will create a condition in the S&P 500 and also in the Dow Jones in the Nasdaq, that it can trigger a bullish retrace at least for one day, so you need not to panic, okay, because that bullish retrace will help you to re-enter if you have missed your chance. Okay, so you can re-enter and you can go bearish on the bullish retrace. Or if you are my YouTube community member, then you need not to worry about this, because I will tell you when exactly this is going to happen, and accordingly, okay, you can take your position. You can book your profits first, and then you can re-enter, okay, on at the top. So this is the condition. Okay, so we must not forget that the S&P 500, okay, on the weekly chart in the coming week may hit. There are very heavy chances that it can hit 0.00. Okay, upon hitting, we can see a bullish retrace. Okay, and if the S&P 500 sustains or survive with the 0.00 in the coming week, then in the next week, okay, so that will be what? That will be the week of October 17th, I guess. Okay, in that week, okay, we can see a bullish reversal. So if you are not my YouTube community member, okay, then I will update you in the next weekly technical analysis, okay, next Saturday. Anyway, so as of now, the technically the stochastic RSI, it is bearish, but don't forget about the zero dot. This is the possible 0.00, okay, and a bullish route. Then comes the divergence. So the divergence, it was earlier coming. So it was early. Okay, earlier it was coming down, but now it is holding. Okay, so divergence is now normal. Not it is not creating any more problem. Volatility 193. Again, the volatility is almost at the all-time high levels. Okay, in the history of the S&P 500. And once again, guys, we are talking about the weekly chart. Okay. So now what we have seen is that the S&P 500 on this the weekly chart, okay, the Ichimoku through the Ichimoku S&P 500 is bearish. Through the moving averages, S&P 500 is bearish. Through the Bollinger Band, the S&P 500 is bearish. Through the MACD, S&P 500 is bearish. Through the stochastic RSI, S&P 500 is bearish. The volatility is high and the divergence is normal. Through all of the technical indicators, the S&P 500 is clearly or is heavily bearish, and that was the reason, okay, I have told my community members that go bearish, because we are still in the bear trend. Means the S&P 500, the entire stock market, the Dow Jones and the Nasdaq, everything is in the bear trend. There is no change in that trend. Okay, so S&P 500, it is heavily bearish on the weekly chart. Now guys, there is one more thing, okay, with this the candle itself, this the candle, okay, itself, that because of this the 0.00, okay, if the 0.00 is seen on Monday itself, Monday, okay, in that case we can see that first it is coming down and then intraday there is a retrace, as the retrace will be there on the Tuesday. Okay, so it all depends that when exactly the 0.00 on the weekly chart, okay, it is seen. Okay, so again, if you are my community member, okay, then through the daily these are daily updates, these are daily analysis, okay, I will update you accordingly. So guys, now we have completed our first part of the agenda, and that was the S&P 500 technical analysis on the weekly chart. Now let's move on to the second part, and the second part of the agenda, and that is the analysis, the S&P 500 technical analysis on the monthly chart. And through that the monthly chart, we are going to see the recession. So guys, now comes our second point of our agenda, and this the second point is the monthly chart, the monthly chart of the S&P 500, where I'm going to tell you that how technically we are going to see a recession in the economy. And this will be the, sorry, not just the recession, but a great recession or a great recession. Okay, so this is the chart of the S&P 500. This is the monthly chart of the S&P 500. Okay, so before I tell you that how exactly we are going to predict, okay, that the recession, I want to take you back, okay, in the history of the S&P 500. Back in the previous, this the great recession of 2008 2009. Okay, from 2007 to 2009. Now in that recession, technically guys, again I'm repeatedly saying technically, okay, if you see that there was this the crossover in the moving averages. These are the moving averages. There was a perfect crossover in the moving averages, and after this the crossover, then the entire stock market, means the S&P 500, the Dow Jones and the Nasdaq, everything came down heavily. Okay, and then it was there. So it all began June 2008, and then July 2008. In the month of August 2008, this was confirmed, a crossover, it was confirmed. Okay, however, the recession was already seen from the very early of this the 2000 January 2008. Okay, when these the moving averages were coming down and coming closer. Okay, so that was the early indication of the recession. And the same thing was there in 2022, when in the month of January 2022, through the technical analysis of the S&P 500 and also the technical analysis of the Dow Jones, I told you that we are now going to enter into the recession, a long recession. In the month of April, I've confirmed that we are now in the recession, but officially the agencies, they are going to announce the recession, okay, in the last months of this the 2022. Okay, anyways, and then it was there from the month of August to the month of March. Then there was this the upward movement. Then finally, okay, but there was no relief, no relief, no relief. And then finally in the month of October, in the month of October 2010, there was a bullish crossover in the moving averages, and then we were back in this the means then we were out from this the recession. Okay, so it all okay, it has begun, okay, from this the month of January 2008. Okay, and then from okay, then in the month of August 2008 there was a crossover, then it moved up, okay, and then there was the intermittent, okay, this is the crossover, and then it moved, and finally in the month of September October 2010, this was over. So this was a long span. Okay, in this the long span, okay, what we want to see, or what you must notice, is that if you see, um so in the month of August, when the crossover was seen, okay, that time if we measure the downward movement, then the downward movement was, or this the downfall was almost 49%. This was 49%. So the entire stock market, the S&P 500, the Dow Jones, the Nasdaq, came down by 49%. As of now, okay, you might see that this is nothing, but when I just enhance the view, that this is the chart, then you will notice the 49%. 49%, okay, it means you can imagine like 49% the downward movement. From where? From this candle. And if I consider the previous candle, okay, this is the high candle, then it was like 52 or 55%. Okay, this means that when we see the same kind of event happening, means the same kind of this the crossover in the moving averages. Okay, let me take you okay, there. So if you notice that there was no crossover in the moving averages after July, or sorry, after October 2010, it was moving up and up. So for last 12 years, 12 years, no, it was, so last crossover, this the downward crossover was 2008. So in last 14 years, 14 years, okay. So so last time this the crossover that was seen, okay, it was in the month of August 2008, and now after 14 years, after more than 14 years, we are going to see the same crossover. Okay, this means that this candle itself was a significator. This particular candle for the month of August, it was itself a significator that now we are entering into the recession. And if you have entered, okay, in this candle, and if you are planning, or see, it means if you have entered bearish in this candle, in that case you can hold your trade, okay, for next 4 to 6 months, and you will see that a minimum of 30%, 25 to 30%, or 40% fall. Okay, so thus fall that we have seen historically we have seen 49% fall. Okay, this means that we can see anywhere around 40% to 45% fall. Okay, from what? From the level. Okay, first we need to see the crossover. So if you notice that these two moving averages are crossing over. Okay, see this, the red moving average, so there is a crossover between the red and the blue. Okay, so if there comes a bear candle, if there comes a bear candle in the month of October itself, then there will be a confirmed crossover in these moving averages. Then in the month of November, most likely all of these the moving averages will cross over. If not, then in the month of December, there will be a confirmed crossover, and then there will be a pattern that will suggest a bear trend. This means that the recession we are anticipating, okay, that recession is going to come, and this means that this the upward movement that you have seen, okay, you can still see some upward movement, but before that you have to see some fall, okay, a fall to 3400 or some, okay, these levels. Then you can see an upward movement in the month of November or December. Okay, you will see that by the time it has crossed over, that will be the perfect time to take an entry or to enter bearish, and then wait for this the 40%, approximately 40% fall, if we consider the historical levels. Okay, the historic level. Secondly, this time I think it will not be the 40%, it should be anywhere more than 50%, more than 50%. The reason is the kind of situation that was there back in 2008, the housing bubble. Okay, that was, but this time the situation is much worse. Okay, why? We have the inflation that is out of control. Okay, feds are trying everything that they can, but still the inflation is out of control. Then we have the food scarcity. Okay, as of now you are not facing the heat, but soon you will see. Okay, the food. Then the utility, the gas. Okay, or this means everything. Okay, that is again this another problem. So back in 2008, there was not much impact of this the global warming, but in 2022, after 14 years, there is a very heavy impact on this the global warming. Okay, back in 2008, okay, there were many people who were means they were they were or they used to save some money. Okay, not everyone, but some. But in the 2022, not everyone is saving money, but the people, they are living paycheck to paycheck. Okay, so this is how they are surviving. Okay, means this time the situation is much worse as compared to what was there in 2008. In 2008, there was only the housing bubble, but other than that, there was no war like the Russia Ukraine. There was no impact, so there was no means the inflation. Okay, means other things were good, but only the housing bubble. And because of that, the housing bubble, okay, that bubble, okay, so there was the bubble burst, and we have seen 49% the downward movement. Okay, from the month when there was a confirmed crossover in the moving averages, right? But this time the situation is different. This time there are multiple problems, not one but multiple problems, and and these problems, okay, they are getting worse. Okay, last time there was one problem, this time multiple problems, and that is why I'm saying that last time it was the great recession, this time it will be the great recession. Although the chances of seeing the entire economy heading into the depression are very thin, very thin. Depression we have seen back in 1928. So there was the 10-year or 12-year long depression from 1928 to 1940, I guess. Okay, from the early days of the World War II. Okay, and the US came out of this the Great Depression only because of the World War II. Because of this World War II, okay, there was a huge demand. Okay, the production and everything. So there was the factories, the new factories, okay, came in, and there was a huge demand for the production. So after this the 10 or 12 years, okay, so there was the depression, and depression means that people, okay, who were super rich or who were rich, okay, even they wanted, or they were like, they were begging for the bread. Okay, so there was a heavy food scarcity. People were so people so there was a situation like that. People, they have bought the luxury cars for $5,000, $4,000. They were willing to send their cars for $100. Okay, but there was no buyer in the market that can buy that car for $100. Okay, so that was an extreme situation. So people, they were farming themselves. Okay, and they were producing their fruits, vegetables, and they were eating. And that is how, okay, means that was a very tough time. Okay, the Great Depression from 1928 to 1940. Okay, So this time no, the chances are extremely thin, because if that the Great Depression happens, then the entire world, okay, it will collapse, okay, and then because it will collapse, then we will see new countries that will be coming out, okay, some countries they will merge, we will see famines, we will see, means a lot of worst thing that you can imagine. So as of now, whatever happens, the governments, the worldwide governments, they will not let the economy, okay, come into the depression. Depression means anything that is means when the stock market has crossed like more than 70%, 75%, 80%. So yes, the 50% fall, okay, in the stock market, 50 to 55%, that is acceptable, okay, or maybe up to 60, okay, but not more than that, because beyond that we will be heading into the depression, okay, and that depression will be again like 10 years long, and no one means that will be extremely bad. So that's not talk about the depression. So the recession, that will be okay. Like a long recession, 2 to 3 years, 2 to 4 years recession. Okay, that will be normal, not the depression. Anyways, so now technically you have got an idea through this the chart of the S&P 500, the monthly chart of the S&P 500, that there is going to be a crossover in these two moving averages. Then in the month of November or December, finally we will see a crossover in all of the moving averages. As of now, this was the bull trend. This was a bullish fan out. Now there will be the bearish fan out. Okay, and then a 50% fall. Okay, from this level. So a 50% from this level means, okay, in my yearly outlook for the S&P 500 that I have published in the month of May, I guess May or June, okay, I mentioned this thing. So the 50% fall, if we consider that this will be somewhere around here, okay, let's say 38, not 38, okay, from 3840, okay, once again 3840. 50%, okay, it is coming down to what? It is coming down to this level, 1916. Okay, yeah, so this was the level that I mentioned in my yearly outlook, okay, 1916 or 2000 level. So 50%, okay, approximately, or we can comfortably say that the S&P 500, the S&P 500 has okay, it has potential to come down to 2000. Okay, as of now it is trading at 3639 or 3640. Okay, it has the potential to come down to 2000 in next 4 to 6 months or within 1 year. Okay, it has potential to come down to this level. And why I am saying that it has potential to come down to this level? Based on the technicals, based on the historical movement. Okay, I'm not adding okay, something new from my side, and I'm not assuming. And guys, once again, do not ever assume anything in the stock market. Stock market, it runs on the numbers, it runs on the technical. Secondly, do not ever hope. If you think that the stock market is going to move up, move up, move up, why are you thinking that it is going to move up when you are seeing that there is going to be a crossover after 14 years? Okay, so even the market manipulators, they are not going to take this risk that they are going to move it up. Okay, because if they take this risk and if they just push the stock market upward, then they have to pump billions of dollars. What? Billions of dollars, not millions, not millions, but billions of dollars. And they will be risking their billions of dollars, because most likely everything is going to collapse. And if they are going bullish, if they are going to move up this the entire stock market, the S&P 500, the Dow Jones, the Nasdaq, in that case they are risking their billions of dollars, and they are no idiots that they are going to risk their billions of dollars. Okay, so they have already trapped. So see, time to time they have trapped, and they will keep on trap. So they have formed this the trap, this the upward movement. This was what was that on Monday and Tuesday? That was a trap, right? Earlier this was also the trap. Okay, at this level. So this was exactly the level, and then this level. So these are the levels. When I told my community members that, see, these are the traps as well as the opportunities, go bearish. And that is the reason when everyone was losing money, my YouTube community members, they were making money. Okay, so all you need to know is the movement of the market, movement of the stock market, the S&P 500, the Dow Jones, the Nasdaq. Once you know the movement, okay, then you need to know when exactly you should enter, where exactly these the market manipulators, they are forming the trap. Okay. Anyway, so we were talking about this, the point number 2 of the agenda, and that was the recession through the monthly chart of the S&P 500. So technically, okay, I have shown you that why we are anticipating a great recession, and that will last for at least 2 to 3 years. Secondly, okay, historically we have seen that back in 2008 2009 it came down to 49%, right? This time when it came down to this the 49-50%, then okay, see, as of now it is confirmed that in this the great recession it is going to hit the 200-month moving average. What? 200-month EMA. Okay, as of now the 200-month EMA is at 2412. It is at 2412. Next month, okay, it may be like 2420, 2425. Okay, means by the time we will be seeing this the confirm this the crossover and the S&P 500, it will be coming down, so it will remain around 2400. This means comfortably we can comfortably say that in next 4 to 6 months, okay, we are going to see a hit at 2400. Okay, this means this the 200-month EMA. Okay, and once again guys, if you are my community members, then on the daily basis, okay, when it will be coming down to this level, then I will tell you, okay, when exactly and at what exact level we are going to see a hit, because whenever there will be a hit, at the very first time there will be a reversal. Okay, so you need to exit your these the trades, okay, at this the 200 month moving average, right? So you can book your profits like 30 to 40%, okay, 45% here, okay, a lot of money, okay, you can book your profits. Then you can out, okay, at this the 200, okay, this the month moving average. Then there will be a reversal, then we will look into that to what level this the reversal will be there, then again it will fall. Whenever it will come down, okay, the second time it will breach, and then it will come towards the 2000 levels. Okay, and once it will be there around 2000, the psychological level, or 1916, okay, 1916 or 1950, etc. Then finally we can see, okay, that the entire stock market, the Dow Jones, the S&P 500 and the Nasdaq, okay, they are so means now there is a reversal towards this the bullish trend, means after 2 years. So in 2023, okay, no relief, I guess. In 2024, we can see, okay, this reversal. Then, in 2024, we can see this the reversal in the S&P 500, Dow Jones, Nasdaq, and the entire stock market. And then finally, in 2025, okay, we can see again a crossover in the moving averages, a bullish crossover. As simple as that. So, guys, this is the story of this the monthly chart of the S&P 500, and how and when we are going to see, okay, this the great recession. Okay, so the great recession, so not great but great recession, okay, will be triggered technically either the next month or the next to next month, when these the moving averages will be crossing over each other, when the moving averages will be in the bearish phenomenon. Okay, so just stay tuned and subscribe to this channel, and through the weekly technical analysis, okay, whenever this will be happening, in advance I will tell you I will tell you that, okay, that when exactly, okay, means in what particular week of the month, okay, or in what particular month, okay, we are going to see this the crossover. So you can subscribe the channel, and I will inform you, okay, through this the technical analysis. And once again guys, if you want to join my YouTube community to get the daily analysis of the S&P 500, to play safe and to avoid falling into the traps, and to make money, in that case you can join my YouTube community. I've given the link in the description and also in the comment section of this the S&P 500 technical analysis. Now guys, let's talk about the third point of the agenda, and the third point of the agenda is the support and resistance levels for this the S&P 500. So I will give you the SP500 support and resistance levels, okay, that you can use to trade. So I will give you the support and resistance levels for the SP500 for the coming week, that is from October 10th, that is Monday, to October 14th, that is Friday. So these are support and resistances, and once again these my support and resistance levels are okay, these are very sensitive for the S&P 500. So I would like to begin with the 3840 first. Okay, so we have this the resistance at 3840, because I'm not anticipating the S&P 500 to breach the 3840 or the zone of 3840. What will be the zone of 3840? See guys, once again, okay, this is something that I have mentioned in each and every video. Whatever these are resistance levels, okay, or the support levels I'm telling you, these are not or in such or as such, okay, the support and resistance levels are never the absolute level. So when I say 3840, it is not the absolute 3840, rather the support and resistances are the zones. They are the zones. Okay, in order to create a zone in the S&P 500, you are going to use plus minus 10 on these the critical levels. Okay, and on these the sub levels you are going to use the plus minus 5. Okay, this is how it will create the zone. So when I say 3840, I mean 3830 to 3850, and then in between these two we have the 3840. So this is how a zone is created. Okay, now 3830 is the lower band of the zone, 3850 is the upper band of the zone, and 3840 is the median of the zone. This is how the support and resistance levels work. So if you are new to trading, then you must learn and you must understand, or even if you are an experienced trader but no one if no one has ever told you about this, then the support and resistance levels are the zones. They are not the absolute levels. That is why you will see that sometimes that sometimes the S&P 500 or the Dow Jones, okay, or any other index, for example in this case, okay, this is what, this is the zone of 3630. This is 3630, and if you notice that yesterday when the S&P 500 it was coming down, it came down to 3620. Okay, because this is an important, okay, this the level, the support level. So what will be the zone of 3630? So when I say 3630, so the zone of 3630 will be from 3620 to 3640, right? So this way, okay, we have created a zone. This is the upper band of the zone, this is the lower band of the zone, and this is the median of the zone. Okay, and this way, by creating a zone, we are giving some room to the S&P 500 to fluctuate. Okay, and if you see that yesterday it came out, so if the S&P 500 it came down to what level? To 3620, exact dot 3620, and then there was a retrace. Okay, then it closed at 3639. Okay, just below the upper band of the zone. Means as of now the S&P 500 has closed inside the zone of 3630. So this is why the zones are very, very important. Okay, and that is the reason, if you see, I've told my members that, see, this is the 3790. Okay, and 3790 is not absolute, rather the zone of 3790. Okay, because earlier it has proven, okay, a very, very important zone. So this time we are again, okay, going to use plus minus 10 for this the particular zone. So this was the zone of 3790, and because the S&P 500 failed to clear or to close the zone of 3790 on 3 consecutive days, this was a confirmation that it is going to collapse, it is going to come down. This is how the zones and etc., okay, these things work. So we have 3840. As of now, I am not anticipating. Once again, last week also I've told you that I am not anticipating the S&P 500 to breach the 3840, the zone of 3840. Okay, so once again in the coming week, the same thing. Okay, there. Then we have the 3790, 3791, the zone. Okay, so again we will count this the zone 3790 plus minus 10 for this the zone. Then we have 3735, a very, very strong resistance, very strong resistance. Okay, because earlier the S&P 500, okay, it has found some good support here. Then we have 3710, okay, again a good resistance. Then we have 3735, again a good resistance. And then finally we have the support at 3630. Okay, and you can see that it found support at 3630. Then then comes the next support. Okay, it comes at 3600. Because it has breached the 3600, then comes the next at 3585. Last time it hit the dot 3585 and it moved up. Okay, so 3585, okay, it is very significant. So I think, okay, it should hit the 3585 on Monday or Tuesday. Okay, so that is something that we are going to talk about in the probable movement of the S&P 500. Then the next support for the S&P 500 is the 3565. Then we have 3527 or 3525, and this was something that I was telling you last week, that we can anticipate a reversal from 3525 and there will be a very heavy reversal. But the market manipulators, they have planned something else, okay, and they went against each and everything. Anyways, then we have a very good support at 3500. 3500, okay, again a very good support. Then the next support at 3475, 3445, 3415. And finally, we have the support at 3400. Okay, again the zone of 3400 plus minus 10 plus minus 10 plus minus 10. So if the S&P 500, if it comes down to this level 3,400, that we are anticipating that it will okay, probably in the coming week, okay, because there is a slip on the 4 hourly chart that I will show you, okay, in the S&P 500, in the probable movement of the S&P 500. Okay. So if we count this the downward movement from this level to the 4,000 3,400, then it is 6.75% fall. Okay, so that is normal, 6.75% within a week, because the market manipulators, they moved it up to by like 5.5% without any reason. That's 6.75%, okay, with a reason, so that is valid. Okay. Anyways, so these are the support and resistance levels. So you can use these as support and resistance levels, okay, to trade and accordingly. And if you see that if the S&P 500 is struggling, okay, on a particular support, okay, or on a particular resistance, in that case, okay, you can plan your entry or exit. And if you are my YouTube community member, okay, then I will give you the specific levels, okay, that you can use to plan your entry or exit. Okay. Anyways, now guys, let's move on to the fourth point of the agenda, and the fourth point of the agenda is the OPEC. And the fourth point of the agenda is the impact of the meeting, or this the update from the OPEC plus. Okay, that how it is going to make the situation worse for the global stock markets, for the S&P 500, Dow Jones, and the Nasdaq, and overall the economy. Okay, not just the American economy, but the worldwide economy. Now guys, I'm going to cover this the fourth point, the OPEC plus, on the chart of inflation. Okay, this is the chart of USIRYY. So this is the US inflation rate, okay, year on year. So as of now the inflation is 8.3, okay, and it is holding bullish. Okay, technically in my last weekly technical analysis of the S&P 500, and the last to last, and means in my previous weekly technical analysis of the S&P 500, okay, I'm continuously discussing this the inflation, that the inflation is bullish and it is holding, and even a 0.00000001% increase in this the inflation will be catastrophic for the stock markets, for the S&P 500, for the Dow Jones, for the Nasdaq. Okay. Anyways, now let's talk about the OPEC plus. Okay, sorry. Now let's talk about the OPEC plus. OPEC plus. So OPEC plus, okay, we have these the major producers, okay, of this the crude oil, okay, and the natural gas. These are the Saudi Arabia and the Russia. So if you are aware of that, the top three oil and natural gas producers are the US, Saudi Arabia, and the Russia. These are the top three this the natural gas and the oil producer in the world. Okay. Now, I think 1980s. Okay, mid 1980s, US was US was producing, okay, that the oil, so that was sufficient for the domestic use. Okay, up to 1980s, I guess. Okay, then from the 1980s, US, so okay, everything has increased. Okay, the consumption of the oil and everything has increased, and now currently in 2022, US is importing 50% of its oil and the gas from Saudi Arabia, okay, and from other companies from other countries like Venezuela, okay, and other countries. So 50%, okay, 50% production, okay, it is domestic, and 50%, okay, are from 50% are the imports. Okay, so now this will help you understand the inflation. Now, in a recent meeting on October 5th, the Russia and the Saudi Arabia has said that they are going to cut down the oil production by 2 million barrels per day. 2 million barrels per day. Okay, so this is a huge cut in the production, very very huge cut. And I want to tell you this thing, that the Europe is seeing energy crisis. Okay, because the Russia has halted, or has means decreased the supply of the natural gas and this the oil to the Europe, and Europe was earlier heavily dependent on Russia. So after this the war on Ukraine, okay, the sanctions were put. The sanctions were made on Russia by the US and the European countries. Because of that, the Russia has decreased this the production and decreased the supply of the natural gas and the oil to the Europe. And now Europe is struggling to survive. Okay, and there are very energy prices are like sky high. Okay, and the governments, they are intervening, so government are rationing, okay, this the oil, the natural gas, okay, and other than that, okay, some other measures. And because of this, the Europe is seeing a very high inflation. Recently the inflation was 10%, something that was not seen in years, in 40, 50 years, 60 years, that was not seen. Now that is seen, and this is the normal, this is the new normal. Okay, unfortunately this is the new normal. Okay, so because this the oil, okay, this thing, it is increasing. See, the fuel is needed for each and everything, for the transportation of the goods. Because when the fuel prices increase, then the transportation will increase. Okay, and then definitely the prices of the essential items, the bread, butter, fruits, vegetables, meat, each and everything that you use, from computers to everything, okay, will increase. When the prices will increase, this will simply increase the inflation. Okay, and currently, if you have noticed that we have seen, okay, the drought in the Europe, okay, and some parts of the US. Other than that, we have seen the floods in the Asian countries. So that has dramatically impacted the food globally, the food. And because food is something, okay, that no one can means no one can avoid. Okay, this is the food, and food is the most essential thing. Food and the water, okay, these are the most essential things to survive, right, for the survival of the humanity. So now these the rich countries, okay, so the rich countries, what they can do, so that they can offer higher prices to the Asian countries and some other countries that are producing, wheat or rice, okay, or some other crops, okay, or some other vegetables. So they can pay higher prices to these the countries than these the Asian countries and other countries. They will supply this the food, okay, whatever they have, to these the rich countries. Because the rich countries have increased the prices of the food, so the other countries, like these are level 2 countries, okay, or the underdeveloped countries, or the other countries, okay, they will have to, because they are also facing the same situation. Okay, so now they will have to pay more. They will have to pay more than the increased price, because these the countries that are producing this the surplus. Okay, as of now, okay, we can say that any country is producing surplus. Okay, but still somehow they are managing. Okay, so now everyone is going to pay higher prices for the food, right? And other than that, now the OPEC plus has decided to cut down, okay, this is the production of the oil by 2 million barrels per day, not per month, not per month, per day 2 million barrels. 2 million barrels, okay, are a lot. This is a huge, very, very huge quantity. Okay, so you can say, okay, hypothetically, okay, if there is, so in one barrel, see, I don't know that this is the exact quantity. Okay, so if in one barrel, if you say that one barrel is enough to run 10 cars, okay, 10 cars, in that case 2 million barrels means 20 million cars. So if there is a production cut of this the 2 million barrels, this means that the 20 million cars equivalent of this the fuel. So if the 20 million cars would have been using, okay, the same amount of fuel every day, so that fuel is now not there in the market. Okay, because now, because there will be the fuel shortage, the Russia will supply less, the Saudi Arabia, okay, will supply less. This will increase the oil prices. This is going to increase the oil prices. When the oil prices will increase, so as of now, currently, for example, currently if you are paying like $3.5, okay, per gallon, then be ready to pay $4, okay, or $5 or $5.5, okay, in next month, or by or next to next month. So you will see that everything is increasing. Other than that, so this is the personal consumption, okay, not a problem. But what about the commercial consumption? Commercial consumption means that transportation, primarily the transportation by air, by land, okay, or by sea. That transportation is going to increase. Okay, that increase will further fuel the inflation. So that is the reason, okay, I have used the chart so that I can help you understand, okay, what we are going to see. Okay, so inflation as of now, if you see, it is 8.3, and technically it is bullish. Now the OPEC plus, who have decided to cut down the production, this inflation is further going to increase, and it will be in the 2 digits. Okay, in what? In 2 digits. 2 digits are something that we have not seen in last 45 years, 45 or 50 years. Okay, so this will be catastrophic. This will be catastrophic. So as of now, you are seeing that the S&P 500 is around 3,600. Then be ready to see that the S&P 500 will be hitting 3,000, and it will be trading below 3,000. Okay, not immediately, but in next few months, 2 to 4 months. Okay, as soon as the inflation, okay, it moves up, the Federal Reserve, the central bank will be forced, the government will be forced to increase the rate. Okay, that to increase the interest rate, and when this the central government will increase the rate, sorry, not central government, but this is the central bank. When the Federal Reserve will increase the rate, it will make everything costlier. As of now, things are already costly. Okay, things are already costlier, but it will further make them more costlier. Your loans, your home loan, your personal loan, your credit card loan, all of your loans will be much more costlier, and that will force you to not to go for the loan. And as such, for the individuals, okay, it doesn't matter. But when the businesses, okay, they are not opting for the loans, this means that the businesses, they are looking for the cuts. Okay, so what they are going to do, the businesses, okay, they will go for the cost cutting. They will fire the employees. The employees, they won't be having any jobs. Okay, so this particular the situation, it is going to get worse. Okay, no, and not for the individuals, okay, but for the businesses also. So earlier, okay, earlier what was happening, that the day the Apple announced, okay, its iPhone, then most of you, okay, most of you, or most of these the people, okay, they were rushing out to buy, okay, there's a newer version of iPhone, even if they have had, okay, a good, okay, or the previous version of the iPhone. But still, because there was the money, there was the credit card, there were the loans, and there was surplus money, so they wanted to buy okay, a newer version of this iPhone. But now, because they won't be having any more money, okay, or they would like to reserve their capital, or they would like to preserve their capital, okay, in that case, these people, okay, they are not going to go for the newer version of the iPhone. Rather, they will try to save their money. And because they are not going to buy these the products like, okay, iPhone, or XY. So iPhone is just an example. Because they are not going to buy, okay, these the expensive products, okay, or some other products that are not required, that will create a heavy impact on the company that is selling the product. For example, iPhone. So Apple is the company, okay, so Apple is making these the iPhones, right? And because there will be this the sales of this the iPhone, iWatch, etc., these are costly items, the sales will, okay, it will decline. This means that the sales is decline, okay, means the revenue will decline, means the overall profit and loss, everything will decline. This means the valuation of the Apple will decline, right? Because the valuation of the Apple will decline, the stock price of Apple will come down. When the stock price of the Apple will come down, it will simply bring down the entire market, the entire stock market, the S&P 500, the Dow Jones and the Nasdaq with it. Okay, this is just one example. The same will happen to the Microsoft, the same will happen to the Amazon, means to all of these the giants, the same is going to happen. And then collectively, the stock prices of these the giants will decrease, okay, it will come down, and that will impact the S&P 500, the Dow Jones, the Nasdaq, and the entire stock market. So this is how the cycle works. And the Federal Reserve Chairman, he has already mentioned, and not just the Federal Reserve Chairman, but the state, okay, Fed presidents, okay, and everyone else has mentioned that they are going to slow down the economy. They want the economy to slow down, and how they can slow down the economy. They can slow down the economy by increasing the interest rates. Because when the Feds, they increase the interest rates, so for example, Feds raise the increase. So for example, Feds raise the interest rates. They increase the interest rates by 2%. Then the banks will be forced to raise the interest rates by 3% or 4%. When the Feds raise the interest rates by 4%, then the banks will be forced to raise the interest rates, okay, by 4 or 5 or maybe 6%. Okay, so this will be much costlier. Okay, and the Feds are willingly doing this in order to slow down the economy. Why they want to slow down the economy? They want to slow down the economy because the inflation is out of control. They want to bring the inflation back into this control, back in the control. Okay. Other than that, in this the month of October, the Feds are not raising the interest rates. Okay, that is a bad thing because in the month of November, the Feds will be raising the interest rates, and by that time the situation will be much worse. So the Feds will be again forced to raise the interest rates by 75 bps, and now this time they can go for 100 bps. Okay, so Feds have a target of 4.6%, the terminal rate. Okay, that the Feds are going to raise the interest rates by 4.6%. Okay, so that translates to roughly 6 to 7%. Okay, to the retail users by the banks. But again, this transaction, this terminal rate of 4.6%, okay, looks like that this is not going to work. So they should go for anything more than 5%, 5 or 6%. So that will translate to like more than 7 to 8%, okay, to the retail traders. So earlier you were paying like 2% interest. Now you are forced to pay 8% interest. Then why would you go and take the loan and when you have to repay the loan, okay, at this the interest rate of this 8%, 4 times, 3 to 4 times, right? So this is the simple okay economics. So these the OPEC plus countries, okay, they are, I don't know like whether they are willingly doing this, okay, or for some other reason, okay, but they are doing this, and that is going to impact each and everything. That is going to force the Feds to intervene and to raise the interest rates further in order to slow down the entire economy and to bring the entire economy into the great recession. Okay, and so earlier it was the Russia Ukraine war, then the food, okay, and other things, but now the OPEC plus, okay, has, so it has simply added, you know, a little fuel, okay, in this the fire, okay, nothing else. So everything is now going to, you know, come down. Okay, so this was with the OPEC plus, okay, the reduction or the decrease in the production, okay, in the oil, and how it is going to impact the economies, okay, the global economies, all of the countries. Okay, so this the situation, it is going to get worse, and it will be much worse for the Europe. It is going to get much worse for the Europe. Now guys, let's move on to our fifth point of the agenda, and that is the S&P 500 technical analysis on the daily chart. So we are going to see how the S&P 500 is performing on the daily chart. Okay, and accordingly and thereafter, okay, we will deduce the probable movement of the SP 500 for the coming week, like what is going to happen, okay, in the SP 500 on Monday, October 10th, then what will happen, okay, Tuesday, Wednesday, Thursday, and then up to Friday, that is 14th of October. Now guys, let's talk about the next point of the agenda, and this is the fifth point of the agenda, that is the S&P 500 technical analysis on the daily chart. So I will do this the SP 500 technical analysis on this okay, through these daily candles, and I will tell you that what the technical indicators are saying. But guys, before that, I want to share this information with you. Okay, the first thing is that if you have not subscribed to the channel, then please subscribe the channel and click on the bell notification icon. And the second thing is that if you want to get the daily analysis of the S&P 500, in order to play safe, in order to understand what is happening, what is going to happen in the S&P 500 on the daily basis, and if you want to avoid falling into the traps, in that case, you can join my YouTube community. So that will help you to play safe, and you can use the opportunities that comes there, and you can make money, right? So in order to join my YouTube community, what you need to do is that, okay, this is my YouTube channel page. I have given the link in the description and also in the comment section. So all you need to do is to click on that link, and then you will, okay, then you will see this my YouTube channel page. Then you will see this is the join button, JOIN join button. Okay, so once you click on this the join button, so once you click on that the join button, then you will see that there are two options, only one midweek update and all midweek updates. Okay, so what are these the midweek updates? Midweek update means the daily analysis. So when I say only one midweek update, I mean that you will, so and if you opt for the only one midweek update, means you will get the daily analysis for this the S&P 500 only on Monday, every Monday, only on Monday. Okay, and if you opt for all midweek updates, means you will get the daily analysis of the S&P 500 from Monday to Friday, each and everything, the videos, the text notes, the updates, each and everything you will get from Monday to Friday. Now, if you notice that more than 98% of my YouTube community members, okay, they have subscribed for the all midweek updates. They have opted for the all midweek updates. More than 98% of my YouTube community members. So if you want to get the daily analysis of the S&P 500, and if you want to play safe, if you want to make money, and if you want to avoid falling into the traps, then you can join my YouTube community. And wherever you want to join my YouTube community, you are very welcome. So now this the S&P 500 technical analysis, or this the SP500 technical analysis on the daily. First comes the candle, as usual, the candle. If you look into the candle, it is a heavy bearish candle, heavy red candle. Okay, for this the S&P 500. However, and so heavy candle, but this candle has found some good support on this. Okay, in this the zone of 3630. This is what? This is the zone of 3630. Okay, but because there was a heavy gap down open and a heavy candle, this means that on Monday we can further anticipate a gap down open, or irrespective of open, we can anticipate a fall. Okay, so there are very heavy chances that we are going to see a gap down open or a fall. Now there are some chances that we can see a reversal. Because why the reversal? The reason is this the 3630, because the S&P 500 has found some good support, okay, at this means in the zone of 3630. Okay, but the most the chances are very heavy for a fall. Okay. So this is the interpretation of this the candle, right? Now comes the technical indicator. So the technical indicator, first comes the Ichimoku cloud. Because the S&P 500 is trading below the Ichimoku cloud, this means that the SP500 is bearish through the Ichimoku, right? Then comes the moving averages. If you see, there is a clear fan out supporting the bear trend. Secondly, the S&P 500 has closed below all of these moving averages. This means that the SP500 is bearish through the moving averages. Then comes this the Bollinger Band. This is the lower band of the Bollinger Band. This is the median of the Bollinger Band. S&P 500 has closed in between the lower band and the median of the Bollinger Band. This means that the S&P 500 is bearish through the Bollinger Bands, right? Now let's talk about some of the technical indicators. So we have this the MACD. If you notice that the MACD looks like that it is trying to cross over, and yes, it will on Monday. Okay. So as of now, the directionally the MACD is bullish. So S&P 500 is directionally bullish through the MACD. As simple as that. Okay, because the MACD is more than the signal. However, the MACD and the signal both are negative. Then comes the stochastic RSI. If you see the stochastic RSI, there is a confirmed crossover in the K channel and the D channel. Now the K channel is less than the D channel. This means that the stochastic RSI, this means that the SP500 is bearish through the stochastic RSI. Divergence last week, okay, that was giving a possible reversal. It has already given, okay, but this was through the manipulation. Okay, so as of now, that divergence is normal. Now the volatility it is increasing. The volatility is definitely it is increasing. Means the S&P 500, the entire stock market, the Dow Jones and the Nasdaq, everything is getting volatile. Okay, so now what we have seen is that the S&P 500, or this the SP500, it is bearish through the Ichimoku. SP500 it is bearish through the moving averages. SP500 is bearish through the Bollinger Band. S&P 500 is bullish through this the MACD. So this is the directional bullish. Okay. Then the S&P 500 is bearish through this the stochastic RSI. So 4 out of 5 technical indicators are saying that the S&P 500 is bearish. This means as of now we will not say that the S&P 500 it is heavily bearish. We will simply say that the S&P 500 it is bearish on the daily chart. As simple as that. No rocket science, nothing. Okay. So now we have discussed that the S&P 500 is bearish on this daily chart. Okay, so this was the technical analysis of the S&P 500 on the daily chart. Now let's deduce the probable movement of the S&P 500 in the coming week, like how the S&P 500 is going to behave from October 10th, that is Monday, to October 14th, that is Friday. So the very first thing that I've told you, that because of this, the very heavy red candle, okay, and because there was a gap down open, okay, a very heavy gap down open, then a heavy this is the red candle, and the S&P 500, it was down by almost 3%. Okay, this means that there are very heavy bearish sentiment. So before that, I want to show you, one more thing. This is there on the 4-hourly chart. Now, if you notice that there is a slip that was formed yesterday on 7th of October, right? And if you have subscribed to my channel and if you're watching my previous technical analysis, then I've told you that whenever the slips are formed, slips are extremely dangerous, okay? And because the slips confirms that the trend will continue. The same kind of slip was formed here, okay, on 13th of September, last month, and then there was a heavy fall, very strong fall, okay. So the same slip, okay, it was formed yesterday, and I have informed my community members, okay, that the slip has now, okay, so that on the 4-hourly chart the slip has formed, and this confirms that the manipulators indeed try to move up the market, the stock market, and the S&P 500, the Dow Jones and the Nasdaq, but they failed because the crossover did not happen that was supposed to happen in the moving averages, neither on the daily chart nor on the 4-hourly chart. Okay, so because it was coming down, so I told them that keep booking your profits and don't get greedy. Okay, then okay, a formation of a bearish slip means now the SP 500 will nosedive towards 3,400, and in one exceptional case towards 3,150, right? So this was something that I have informed, okay, so I have informed my YouTube community members very well in advance, okay, and they have booked their profits and they have entered into this, okay. Anyways, so because we have seen a slip, this means that now the S&P 500 is going to come down, okay, further, means it will breach the 3585 in the coming week and then it will come down, okay. So the slip has confirmed that the bearish movement will continue without any interruption. Okay, interruption, I mean the short-term bull trend that is not there, okay, and the short-term bull trend, it is now it is not there, okay, at least until I guess by the end of October or by next month, okay. So we are not anticipating anymore, not anymore, but we are not anticipating any short-term bull trend, okay. A short retraces, bullish retraces, okay, just like let me first make it the daily chart, okay. So bullish retraces, okay, through the technical, just like this one, okay, this will be there intermittently, the bullish retraces will be there, that is normal, that is the natural flow of the stock market, that is the natural flow of the S&P 500, okay. Intermittently you will see because or because someday the stochastic RSI, the channels, okay, they will be 0.00, so that will further, okay, push the stock market up, okay, means there will be this the bullish retrace, so that is normal. Any bullish retrace will give you an opportunity to go bearish, just like this one, okay. When this was the bullish retrace, it will see, so when this bullish retrace it was seen, I've informed my community members that see this bullish retrace is an opportunity to go bearish. Next day a heavy gap down, so they have booked their profits that day, okay. Anyways, now this is confirmed that the bearish trend will continue, okay. uh, now there is one more thing that I want to tell you. In the coming week, in the week of October 10th, 2022, on Thursday, so Thursday will be October 13th. Yep, October 13th. October 13th, CPI data will be published for the month of September. Okay. Now, this CPI data is going to be very important. Why very important? Because in this, the inflation chart, okay, I have shown you that the S&P, sorry, not S&P 500, but this the inflation. Inflation is holding at 8.3. If the CPI data comes, okay, anything that is more than 8.30, even if it is 0.000001% up, more than 8.30, it will be catastrophic for the entire stock market, okay, for the Dow Jones, for the S&P 500, for the Nasdaq, not just for the American markets, but for the worldwide markets, okay. And as of now looks like that it will be, because the dollar index is moving up, 2-year bond yield is moving up, okay, and then the OPEC plus, okay, they have triggered, okay, this the production in the okay, this. crude oil. So as of now, okay, but again, we must not assume anything, okay, and we must trust the CPI data, or not just CPI data, but the data that comes out, the actual data. Okay, on Thursday, the S&P 500 and the entire stock market, including the Dow Jones and the Nasdaq, will be heavily volatile. Heavily volatile. So this CPI data, it will be published at 8:30 a.m. Eastern time, 8:30 a.m. Eastern time US. Okay. So on this Thursday, so things will be okay. So we will come to know what is going to what is going to happen on Thursday. So we will come to know about this on Wednesday. Okay. So the movement on Wednesday will confirm that what we are going to see or what we are going to expect on Thursday. So if you are my YouTube community member, okay, and if you have subscribed for all midweek updates, okay, in that case you will get my daily analysis, and I will tell you what you are going to expect on Thursday, okay, and what we can expect and how you can play safe. Because the market manipulators, they will once again they will try to take advantage of this particular situation, and they will try to form a trap, okay, either on Wednesday or on Thursday itself, okay. And later, okay, once the retail traders, okay, they are trapped, then the market manipulators, they will dump, okay. So this is what they do. So I will tell you, okay, how they are planning to form this trap, okay, on Wednesday, most likely on Wednesday, okay. Um so these two things are clear, that on the 4-hourly chart, number one, that on the 4-hourly chart there is a slip, and this slip has confirmed that there will be a fall, there will be the continuation of the bear trend. Number two, that the CPI data will be out on Thursday, so that will be, very, very important. And if the CPI data comes out anything above 8.3, then the disaster, okay, nothing else. Now on Monday, okay, again, because this was the 3630, because the S&P 500 was able to hold above this, the 3630, okay. So but because there was the heavy bearish candle, so first of all, okay, there are very heavy chances that we are going to see a gap down open, okay, and then after this the gap down open, okay, and then the immediate this a fall. And why, okay, why this the gap down open and why the fall? Because of this the 4-hour slip that was formed, okay. So it will then come down, and then first it will breach the 3585, and this is what I mentioned, that whenever the manipulation happens, then after, and once the manipulation ends, then the market, the stock market, or the S&P 500, it will be cut down to its size, and it will be back to the level from where it was manipulated. So this is, I have repeatedly mentioned, okay, in my text notes, okay, in my video update to my community members. Anyways, so this is the most probable movement. So this time, whenever it comes down, it will be coming down to what? It will be coming down to 3400. Okay. Now on Monday or on Tuesday, what will happen? That on the weekly chart, the stochastic RSI will hit 0.00. Okay. So either on Tuesday or on Wednesday, we can see a reversal, okay, or a bullish retrace. Okay. The intensity will be known only on Tuesday or Wednesday only. And again, if you are my community member, then I will tell you about the intensity and to what level, okay, it can retrace. Anyways, that will happen either on Tuesday or on Wednesday. Okay. So first it is expected to come down. It will be coming down around 3400, then a reversal from this level. Then if the reversal comes on Wednesday, if the retrace comes on Wednesday, then on Thursday the CPI data will be out, and most likely, okay, the CPI data will be more than 8.3. So on Thursday itself, it will see, again, this is the next fall, okay, next fall towards what? Next fall towards this was 3500, this was 3500, okay. So the next fall will be towards 3400. So in just 1 week, we will see that it is coming down to 3400, as simple as that. And now whenever it try to it will try to retrace. So first it will be, it will be suppressed, okay, by this the 3585, and then the zone of 3630 itself, okay. And if there comes some good news from somewhere, in that case it can even breach 3630, and then it can retrace to these levels, okay. This level will be 3710, okay, 3710. But again, every retrace will give you an opportunity, because eventually the S&P 500 is going to fall, the Dow Jones is going to fall, and then the Nasdaq is going to fall, the entire stock market it is going to fall. Intermittently, you will see the bullish retraces. The retraces will come only when the technicals will be saturated. As of now, we are anticipating that first it will come down to 3500, and then only we will see, okay, a saturated technical on the weekly chart. Once it will be there, then we can see a reversal, a retrace, okay. Now, the second case is that if we consider that the 3630 is holding, okay, and the 4-hour slip is not strong, however, the chances are very, very less. So you can say that there are 75% chances that we will see a gap down open, or irrespective of open, we will see that the S&P 500 it is coming down. 75% chances. Now the 25% chances are that because 3630 the zone was holding, okay, if there comes a gap up open, then the 3630 will act as a strong support. So it will act as a strong support, and then the S&P 500 it will try to move up. To what level? To 3710. That's it, because it has already failed 3790. So it means it is now done with the 3790. 3710, and then it will see a fall. So fall will be there irrespective of anything. The fall will be there no matter what. As simple as that, because there is a slip on the 4-hour chart, and technically it is saying that the fall must be there, either immediate fall, okay, or a fall after this the retrace. Now again, if the market manipulators they come into the picture, then again they can push it up to 3790. But now the chances are less, because the retail traders they were trapped and they have lost a lot of money. Okay, so first the market manipulators must, okay, bring it down, and then only, okay, they can manipulate this the stock market or the S&P 500. Okay, so anyways, so this will be the movement of the S&P 500 in the coming week. 6.75% fall, that will be normal, that will be acceptable. Irrespective of anything, we will see a fall. Even if there comes a retrace, we will see a fall. The retrace, bullish retrace, will come when the technicals will be saturated. Okay, we will see, okay, that on Tuesday or Tuesday or Wednesday. Then on Thursday, okay, the CPI data will be out, and again, okay, I will inform my community members, okay, how to trade and how to make the best use of the CPI data. Okay, so guys, once again, if you want to get the daily analysis of the S&P 500, then you can join my YouTube community, and you will get the daily analysis of the S&P 500. Okay, through that you can play safe, and you can get you can grab the opportunities in time, and you can make money. Okay, but the most important part is playing safe and avoid falling into the traps. And other than that, guys, if you have not yet subscribed to my channel, then please subscribe the channel and click on the bell notification icon. And guys, if you like this video, then hit like, okay, and if you want to ask any questions, if you have any question, then please comment, and I will answer to your questions. Okay, so guys, this was my S&P 500 weekly technical analysis for the week of October 10th 2022. That is from Monday October 10th to Friday October 14th.